G'day everyone and welcome back to Pete's Investing. Today is May the 13th, 2023. This is the NASDAQ price update. First we look at the weekly trend. You can see there it's a bullish movement, but the daily is showing a neutral positioning. So predominantly avoid taking trades unless we see both weekly and daily are aligned. And what I mean by that is, for those new to the channel, we've got the triple moving average of the price chart on the weekly, and that's moving average 3, 5 and 60. And that's aligned with the CCI 150 moving average of 5 and 50. When they're both aligned like they are at the moment, this indicator down here shows a bullish momentum. And when they're aligned in a more bearish signal, it shows a bearish, and when they're differed from each other, it shows a neutral positioning. So that's the weekly trend showing a bullish movement. On the daily, it's showing a neutral positioning because I'll explain what this divergence means in a minute. But basically you can see there, if I zoom out, got this support at 10,432 and resistance at 13,722, and at the moment the price is approaching that key resistance area, and that's where it touched a few times in the past. So we've also got these diagonals, and the price may actually drop and bounce off this ascending diagonal in the coming days possibly. Now what I've got here in these dotted lines is a bearish divergence on the CCI versus a bullish divergence on the price chart. Now they don't always work out, but when they do work out, if it works out, what it means is if this bearish divergence works, we should see the price collapse, and likewise we should see the CCI also turn to the downside. So that's where it's headed towards at the moment. Otherwise, for this divergence to fail, we need to see the price continue to the upside, most likely approach this resistance, and we should also see the CCI break to the upside, in which case this divergence has failed. So generally, these moving averages of the CCI and a price chart generally are aligned, as you can see there. They generally move in the same direction with exception of these divergences. So we do pay close attention to these divergences, as well as any diagonals and horizontal support resistance lines. That's the daily. So cautiously avoid going long or short because of that signal. On the hourly, you can see there it's broken down quite substantially in the last few hours and coming close to this. We could also draw another diagonal across there, but I won't make it too messy. So I'll see where it stops in the coming hours. And what I've got, and this is a trading idea, when both weekly and daily are aligned, if they're aligned long, we take long trades on the hourly or smaller time frame when the candle breaks above the fractal. Or if the weekly and daily are showing both short trades, we take short positions where the candle breaks below the fractal, such as in that example. And we take small percentage gains where they make sense for you. And I usually take a small, 0.005% gain in such cases. What I've got up here is a back test using that same methodology. And again, this is only going long. So you can see there, each of these little bars represents an entry and exit of a trade. And where it's doubled up like this with steps, it means we've averaged down multiple times. Now you can see there, this is a profitability chart. You can see there our profitability's taken a hit. What that means is this whole program doesn't discriminate between the weekly and daily trends. It just runs throughout the whole period on an hourly basis. What I'm suggesting is you do pay attention to the weekly and daily trends. You can see there the weekly is showing no bullish trades during that period, which is equivalent to this period. So you would have avoided taking bullish trades during that period, which means you would have avoided taking that drawdown. So to understand how to trade this and other strategies, reference the Patreon list page in the description below. We provide stock scans, currencies and commodities. Subscribe, like and share the video. Thanks for watching, and see you in a future video.